we really are at a point where, okay, raising rates is starting to have that impact, we're getting to a point where we're going to start dropping rates again, then I think that's going to be rocket fuel for the gold price.
Today, we have a special guest, and we're going to talk about your favorite subject, silver and gold. I'm joined by Dan Wilton. He's the CEO of First Mining Gold. They're a Canadian gold development company with a portfolio of projects, including 2 world-class size projects, each of which have 5 million ounces of resources. Dan, welcome to Ron's Basement.
Ron, thanks very much for having me. Great to be back.
Yeah, it's great to have you here. We had you here live about a year ago, and you're always a welcome guest in Ron's Basement. So we're having a good day in the gold market today. I think last I checked, we were up about $20, approaching in US dollar terms that $2,000 range. But sentiment still seems to be a little challenging. Do you have any read on what you're seeing out there from your perspective as a CEO?
Yeah, it's interesting, Ron. I was looking at this morning as well, and reflecting on the fact that we've seen gold now. We're a 9 iron from $2,000 again. I think you go back 2 or 3 weeks as they were raising rates again, and a real amount of concern crawling back into the market about, you saw the gold price push down to 1900 and had just absolute fierce resistance at 1900, which I love to see. I think we're at this turning point, and we've talked about this a little bit in the past, but you're almost in this no-lose situation for gold. And I've never really seen anything like this in my life, where you've got inflation still proving far more difficult to deal with. Central banks having now basically capitulated and said, okay, inflation's more difficult to deal with. We need to, keep rates higher, move rates higher in order to deal with inflation. We're starting to see some of that inflation looks like it's abating, hopefully. And that's good for everyone, right? That's good for all of our accumulated wealth that's no longer going to be eroded by inflation, which is the real risk. But I think if inflation is going to persist, you want to hold gold, right? You want to hold gold and real assets in order to protect that wealth. And on the flip side, if we really are at a point where, okay, raising rates is starting to have that impact, we're getting to a point where we're going to start dropping rates again, then I think that's going to be rocket fuel for the gold price. And I think we've seen that here today and this week, where going back a couple of weeks, where just everyone's baked in 100% probability of another rate hike coming. But now that the numbers in the economy are starting to show maybe inflation starting to abate, then just an inkling of the fact that at some point rates might stop going up has gold up $100, right? And just imagine what happens. Historically, when you go into a lower rate environment, you tend to see gold really go higher. And so I think we're in a very interesting position here where, gold's going to win on all fronts.
Yeah, it feels like, I like to use the analogy that gold and silver and platinum, all the precious metals have been like sailing into the wind for the last 2 years. And any inkling, like you said, of a potential pivot in like the price of gold and silver just want to take off. And I think it's important for us to remember as well, in particular, the gold price, it's held in there pretty darn well over the last 2 years. And as you alluded to, it feels like 1900, I have a regular guest on my show, Buddy Rumble, the Louisiana gold guru. He says 1900's the new floor. It feels like any little chance, like any little shift in the wind, and gold just really wants to take off. And I think on top of that, and I want to get your read on this, sentiment from all the measures that I see, whether you're looking at the miners or especially the development and exploration companies, or even toward the metal in general, sentiment is still, to the extent you can quantify it, pretty darn low. And the path of least resistance for sentiment is improvement. So if we get, like you said, gold's within a 9 iron of $2,000, it's also within striking distance of a new all-time high. It just feels like to
Absolutely.
me, yeah, if we get to this new all-time high, 2150, 2200 US dollars per ounce, that it could really zoom from there, really go up quickly.
Yeah, I think that's right. And a couple of things that I always think about in the bigger macro picture, we get pretty wrapped up in what the US dollar gold price is. Um, and we sometimes do that without keeping sight of the fact that gold's already at all-time highs in almost every other currency on earth, right?
Yeah.
Certainly euro, Japanese yen, Canadian dollar, we're at or like very close to the striking distance of real all-time highs. And some of those all-time highs have been set for a little while. So I think that's another important thing. It comes back to a couple of the other real fundamental drivers here. Gold we've seen hold in at 1900 despite there being record outflows in gold ETFs in the last, month, 2 months. So, when you talk about sentiment, that's one of the things that really echoes to me is that you've seen much of the investing world kind of moving away from gold. And the fact that it's held 1900 in this context of, a lot of the ETFs already selling, but a lot of that buying has been picked up by central banks, right? A lot of central banks that haven't bought gold previously are starting to buy gold. One of the most notable in reasonable size is the Central Bank of Singapore that, announced its first sort of major gold purchases or increases in gold purchases over the last couple of months. Like that activity in the central banking sphere is starting to really ramp up. And I think that's likely in preparation, as we've all seen here. And we're hearing talk about it. I think we're going to know a little bit more over the course of the next 30 or 45 days, is just the BRICS countries starting to talk about a new gold-backed trading currency. And
Yeah.
just imagine what happens when 30 or 40% of global trade now is going to be backed in a currency other than the US dollar. And the fact that it's backed by gold is one thing.
Mhm.
But just the fact that it's not backed by the US dollar, I think is going to have a US dollar to gold price move that, even if in other currencies the gold price doesn't move as much, I think you're going to see some impact on the US dollar gold price because of that.
Yeah, it's interesting, and I don't know that enough attention is paid to this fact that the world central banks last year bought more gold than any other year. It was either 1955, 19, whatever year it was. The last time they bought this much gold, we were on a world gold standard. I
Yeah.
mean, and if you read between the lines, what is that? What is that telling us? I want to zoom in on the BRICS, since you mentioned that. Even if we just look at what I like to call the IC in BRICS, the I and the C, the India and China, they both have 1.4 billion people living in their countries. That's compared to the US, that's 8 to 9 times the US population. Their economies are growing, right? I think I just saw yesterday, China announced their economy grew at only, and it was disappointing, 6.3% in the second quarter. Okay, only 6.3%.
Yeah.
Those countries are moving towards a gold-backed reserve currency, trading currency. But I think it's also so important to realize that all those people in those economies that are growing, that have growing middle classes as well, and they're opposite of what we have in the West. Over there, everybody appreciates, and most people own silver and gold. I mean, when I think about it, I'm like, wow, it's just astounding to think that number of people that are growing more wealthy that are moving towards precious metals.
Yeah, and I think that the sort of groundswell of support hasn't even begun to be felt here. That's that kind of, whether it's jewelry demand or it's coin demand or it's bar demand. I think you're only going to see that grow, particularly when the central banks finally, decide that in order to, guarantee trust between themselves. The
Yeah.
only thing that's going to give them the trust in trading, they're not going to trust each other's currencies, for transactions. They're going to create a new currency that's backed by gold. I mean, there's a lot of detail that we need to figure
Sure.
out before we can understand what the actual impact of that is going to be. But it can only be positive. The only question
Yeah.
is, how positive is it going to be? Or is this going to really usher in an era, an era of meaningful moves in the gold price? And that's where, I start getting pretty excited, not just because, we all live in this industry, in and around this industry where the gold price is so important, but when you start looking at projects like we have in First Mining Gold, with millions of ounces of gold in the ground, the leverage that those projects have to higher gold prices is very significant. So
Yeah, that
yeah,
was my
like
next
good times ahead.
that was my next question for you. Like, where's all this gold going to come from, Dan? Do you have any idea where we might be able to find 10 or 12 million ounces of gold? Let's talk about, you have a portfolio of projects all in Canada, right? Which is
Yeah.
becoming more and more important jurisdictions, right? You're Ontario, Newfoundland, but you have two big projects. Let's focus in on those because I think they're super interesting and need to be explored by our audience that's joining us today. Let's talk about Quebec first, the Duparquet project. It's been about 1 year since you've kind of consolidated that project. What's special about the Duparquet? What's not
Tell you,
special?
so many things are special about Duparquet, and the more that we get into it, the more excited we get. To be honest, Ron, we're working right now on preliminary economic assessment, which we should have out kind of at the end of the summer, early in September. And I think that's going to be a great snapshot. It's not going to be the final answer, but it's going to be a great snapshot of what we think this project can be, which is a meaningful gold producer in the middle of the most prolific gold belt in Canada, one of the most prolific gold belts in the world. The Abitibi's produced more than 200 million ounces of gold over the last, 100 and however many years. So this is, not just, we got 3.5 million ounces of M&I resource, another 1.5 million of inferred. But what we're really excited about, Ron, that I think we're going to start demonstrating as we're drilling there right now, James Maxwell and our exploration team have done an amazing job in really over the last year building our understanding of this deposit. And I think you're going to see very quickly that what we're talking about here with these 5 million ounces is really just the starting point. This is basically unexplored below 500 meters in an environment where, the Abitibi always say the real mines don't start until a kilometer down. That's where things tend to get bigger and higher grade. So just an amazing starting point with Duparquet, and yeah, we acquired it last year. It cost us about $25 million to consolidate this land package, and our goal is to demonstrate that this is something that has multiples of that in terms of fundamental value at the outset. And then I think from there, as we talk about leverage to gold price, as we talk about exploration success and our ability to grow that deposit, I think this is pretty quickly going to ramp itself up to one of the biggest and most economic. And by the way, for open pit mines, one of the highest grade gold projects in North America at this point.
Wow. So, and is it accurate to say that when Keith Neumeyer founded the company, this was something that was his intention, was to consolidate this package, and that you'd been working on it for years, and that this is the first time that there was a lot of individual owners, that now everything is under one umbrella, which is First Mining Gold?
Correct. Yeah. So we acquired First Mining prior to my arrival, but First Mining acquired Clifton Star, which had optioned the project and only earned into a 10% interest in the companies that owned the project. But First Mining acquired Clifton Star in 2016, and that kind of started a process. We got to kind of know our partners in the project. I joined in 2019, and from then it was kind of 3.5 years of us moving down a path to, getting the owners of the project comfortable with who we were and what our game plan was, and B, ultimately getting to a point where, yeah, they were comfortable seeing this, which was, a real an asset that was, had some real emotional attachment to largely a family that had owned it. Been in the family with some other friends and other shareholders, but since the mid 1950s. So this really was the first time. Clifton never completed its option agreement. This was the first time that the ownership of this has been in the hands of someone really moving it forward since the mid 1950s, which is
And
remarkable to find that in
yeah,
the middle of the most prolific gold belt in Canada. It really is. I think it's just an absolute once in a lifetime opportunity for us.
and there were past producing mines on the property. It's a
Two past
community
producing mines.
that's used to mining. From a location perspective, we aren't talking about helicopter rides to get to the mine site. Is that correct? Or is
Yeah,
there
no,
infrastructure?
the infrastructure is unbelievable. I mean, if you look at the Abitibi broadly, you could kind of draw a triangle that would go from Val-d'Or, Quebec, to Timmins, Ontario, to Kirkland Lake, Ontario. If you draw a straight line from Val-d'Or to Timmins, you go basically over top of Duparquet, which is about halfway. So
Wow.
when I say smack in the middle, I guess it's smack in the middle of the Abitibi. So the town of Rouyn-Noranda has they've been mining there for 100 years. The old Noranda mine. It's Canada's copper capital. It's got a smelter that's been operating for almost 100 years. Timmins, again, one of Canada's great gold camps, about an hour to the west. Rouyn-Noranda is half an hour to the south and a little bit east. And the road between those two major mining centers literally goes over the top of our deposit. So the infrastructure here is unbelievable. And what that means for us is, as we've started getting into the exploration there, we've got fantastic exploration contractors. We've got great drilling contractors who, believe it or not, in the mining business, they're kind of working 5 days on and 2 days off.
Right.
They get to go home at night. They can sleep in their own beds, because right around here, there's not a mining supplier in the world that isn't present within 200 kilometers of this project, right? That's
Wow.
the benefit of being in the middle of a gold belt is, if you need a real piece of kit, if it's not coming from Val-d'Or or Rouyn-Noranda, it's coming from Timmins, right? Like major mining supply centers, all within largely, an hour and a half drive. So just remarkable infrastructure that way. And then a municipality that was actually built to house people working at the mines in the 1930s and the 1940s. This is the definition of a mining town that was
Right.
built around the mines. And you look at, I'll get you a picture of the crest of the town of Duparquet. It's phenomenal. On the crest of the town, there's a moose, there's a fish, and there's a pickaxe, right? Like we hunt, we fish, and we mine. That's what we do in the town of Duparquet.
Yeah.
So we have a great receptivity and great reception from the municipality, and we really want to work to scope a project that is embraced by this community and allows the community to grow and develop, and there's a lot of really maximize the benefit of a development going on in some people's backyards.
Within that community. And I know there's a defined resource on that property. Obviously, there was a lot of work that went into defining that resource. I'm just curious, do you have any estimate, if you had to start from scratch and do now all that work that had been done over the last several decades, any idea how much roughly how much that might cost to accomplish in today's dollars?
Yeah, so not to mention the time,
Hmm.
because
Right.
Clifton and their
Yeah.
option partners did a ton of work. So just to give you some metrics, 270,000 meters of drilling in this project between 2008 and 2014, 2015. Full scale metallurgical program, including pilot plant testing uh, of flotation and pressure oxidation, full environmental baseline report that was prepared, pre-feasibility study, that was completed in 2014. So all of that, just an enormous amount of work. My estimate is somewhere between 75 and $100 million of replacement value of the work, not counting, what you need to have in terms of infrastructure in a company to do that work over a 6 or 7 year period, right? So
Right.
you can pretty quickly add that up, that if you were starting today and trying to accomplish the same thing, I think it'd be at least $100 million worth
Wow.
of value in this project.
Which is the full market cap of a lot of junior development companies right now.
Including First Mining Gold, by the way.
Well, I was going to let you say that, but but wait, there's more, right? That's
Yeah.
so you've got this great project off a highway, in a town that has a pickaxe in their town crest, but there's many other exciting projects within the First Mining portfolio. We're going to talk about just one more of them, Springpole, right, which is another 5 million ounce development project that you've done a ton of work on. Any updates? I know there were some drilling results that came out, and maybe possibly some more results that we can look forward to in the near future.
More results. Keep your eyes peeled here in the very near term. We expect to have kind of the final of the results from our fall and winter exploration program regionally around Springpole. So Springpole sitting at 5 million ounce equivalent, because there's quite a bit of silver there too for the silver fans in the crowd. Call it a 5 million ounce equivalent resource that we have our pre-feasibility study out in 2021 that shows a big and very robust project. But in addition to the existing resource, we have 70,000 hectares of almost unexplored greenstone belt, where the really significant part of these exploration results that we're putting out, Ron, is that they're demonstrating the gold endowment in this district. We've only started to scratch the surface. There's gold pretty much everywhere here.
Right.
You got to vector in to find what are going to be the economic deposits, but we've had very interesting results so far at 3 of the 4 targets that we have tested, and so a lot more work I think that we can do to demonstrate that the life of this district is going to be decades, not just as we had scoped kind of an 11-year mine life at Springpole. So, and on top of that, I think one of the things we're getting very excited about is we've got to understand the deposit better at Springpole, and that's a lot of the work that you do to define, your geotechnical characteristics and your hydrology and your hydrogeology, your waste rock characterization. As we've done all of this work, we've kind of stumbled into a couple of things that are really getting us to understand that even just right around Springpole, there's a lot of room for this deposit to grow.
Wow.
So we're actually just scoping out this week what that, call it in-pit resource conversion would be, because we still have some, I think probably 16 million tons of inferred material inside the pit from our feasibility study work that's been ongoing. So there's an ability to convert that, which improves the economics, and then there's a couple of different avenues that we'd like to vector into what I think could be pretty meaningful resource growth that starts taking this from that 5 million ounce level and starts moving it up into the really rarefied air of those 6, 7, 8 10 million ounce deposits that are truly, by everyone's definition, world class, sitting in the middle of a largely unexplored district that we're kind of the anchor tenant and main landholder in. So lots of good work going on there, making, I think, very good progress on our environmental assessments. Lots of discussions with the Indigenous communities around the project in terms of how we can maximize their participation and craft that ongoing long-term relationship. So lots of really important catalysts coming at Springpole over the course of the next 12, 18 months, and all targeting that environmental assessment approval, which we're targeting submitting that final EA about a year from now, and targeting that EA approval, in, call it, mid 2025.
Yeah. So two massive development projects in Canada that are moving forward, and the timing could be just right as the gold mining industry needs bigger projects, and potentially, just maybe, we get a much higher gold price at the same time, which makes the projects, which are already attractive economically, even more attractive. Is that a somewhat accurate statement?
That is exactly the thesis right here. You know, we always said, going back to 2019 when I joined, our goal is to have these projects ready to go when the industry needs them the most. And right back to the first thing that you said in this interview, um, you know, where's the gold going to come from?
Mm-hmm.
And I think that is getting to be a much, much bigger question in the industry right now, because a lot of the producers are generating record free cash flow and really have very little avenue for resource growth, and they don't really have any new projects that they have in their own pipelines to build. They can incrementally expand in a lot of cases, but for that new productive capacity, particularly in tier one jurisdictions, particularly of projects that can produce, 200,000 ounces a year plus, it's just a really, really small list and getting smaller all the time. So, from our standpoint, it just, the indicative benefit of the gold price, maybe you look at our Springpole pre-feasibility study, every $100 on the gold price translated into $150 million of after-tax NPV on our project, $250 million of pre-tax NPV.
Wow.
So, just for context, it's basically more than our market cap, with every $100 on the gold price above $1,600, which is where we benchmark that one, right? We do a study today. Yes, there's been cost inflation for sure. But we do a study today, you're going to run that at a higher gold price number. And, that's where I think if we're in a situation where maybe inflation is kind of coming under control, maybe the supply chain challenges are fixed, and you get to a point where, there's some factor labor availability because there's a bunch of projects getting built right now that get completed. And then there's kind of nothing else to build. Well, that's a good time to be looking to scope the build of our project. So yeah, you had a $2,500 gold price. My math's not that good, but nine times $150 million on the increment on our Springpole after tax NPV. That starts what's that, 1350 US incremental NPV on top of $1 billion NPV. I mean, that's, there you're at $2 a share just on Springpole NPV inside First Miner, almost $3 a share. So
it appears to be an asymmetric risk reward profile to the upside, to the benefit to the upside. And so if anybody out there, and those are just two of the company's projects, if anybody's wondering where the gold might come from, well, you might want to look at First Mining Gold. And I want to mention, you've been so generous with your time this morning, Dan, but I do want to mention that there's 4 other projects owned by the company or that have been partnered out. You've got the Hope Brook project in Newfoundland that you've partnered out with Big Ridge Gold. That's an exciting project. There's the Pickle Crow project, who you partnered with Autico out of Australia. That's also in Ontario. That's an attractive project. And there's the Treasury Metals. Well, you own, is it 10 or 15% still?
About 15% still, yeah.
You own with the Goliath project in Ontario. And finally, there's Cameron, which is still 100% owned by the company. And that's, if I have it correct, alone, that's in Ontario. But there's a resource that approaches 1 million ounces of gold at Cameron.
Yeah, it's about 500,000 ounces of M&I and about 500,000 ounces of inferred. And again, that's a starting point as far as we're concerned there. It's Cameron's a little undiscovered gem sitting inside the company. It was a project taken to feasibility twice in the 80s and 90s. It's got a ramp down 300 meters. It's developed into ore underground on 3 levels and located 80 kilometers from a mill at Rainy River for a mine that's going to run out of ore in the next 2 or 3 years. So No, we think it's an absolute, and on top of that, the existing resource at Cameron is only a small portion of what is a 40,000 hectare, like we talked about at Springpole, a 40,000 hectare district scale exploration opportunity at the intersection of two major crustal geologic features. And we've got a dominant land position there. And lots of kind of walk-up exploration targets. So still some work to do on the community front there. We've got one exploration agreement signed with one of the communities in the area, and moving toward building out on that with a few of the other communities. But no, I think we need to find a path for people to understand a little bit better what Cameron is, because it is a real kind of hidden gem sitting inside the company today.
I've heard several times over the years as I followed the company, Keith Neumeyer speak very favorably regarding Cameron, and it doesn't get a lot of attention right now. But I think at this point there's no question where the gold can come from. It can come from First Mining Gold. If people want to learn more about the company, firstmininggold.com.
Yeah, best spots website, www.firstmininggold.com. There's a lot of information there, including, if you're so inclined, get into our 10,000 page plus environmental assessment on Springpole through that channel, and keep watching the news wires here. We've got a couple exciting things, I think, coming out over the course of the summer, and really focused on delivering that first sort of our first cut of the economics and a concept for development at Duparquet in the fall, which I think is going to be very exciting.
Yeah. Well, I have to throw in my disclaimer. I'm not offering financial advice, but it's a company that I've owned for years. I followed closely for years. There's a couple other factors that I find very attractive. That is that I know you have a lot of your own money in the company, your own skin in the game. And the other thing that I really like about First Mining is the decisions that I've witnessed you make in particular in the last 3 years are always long-term focused and strategically focused. And I do believe that in the long run, shareholders, hopefully including myself, will be rewarded by believing in the company. So Dan, on behalf of everyone who's joined us today, it's always great to talk to you. Thank you for sharing information about the company, but also your thoughts on the general gold and silver market as well.
Well, thanks, Ron. It's always a pleasure to be in the basement, if only virtually. And no, we, as always, immensely appreciate the support that you give to us, and really, value your insights and how you're building such a great community around gold and silver, around you, like-minded investors. And yeah, really appreciate everything that you do, Ron. So thanks for that.
Well, thank you, Dan, and we'll see you soon.
Absolutely. Take care.